Last week, each of the major markets closed over a percentage point higher. The greatest gains occurred overseas, as the MSCI World Index and emerging market indices led the pack higher. It has been some time since the international markets outperformed the domestic markets on a weekly basis, but the MSCI Country indices saw consistently higher returns than that seen in the domestic market last week. However, that's not to say that the domestic markets underperformed last week. The gains were fairly consistent at the sector level, with only the communication services sector ending essentially flat on the week. Nevertheless, some of the largest returns were in some of the smallest sectors, masking the performance for the week. The S&P 500 only closed noticeably lower one day last week, as the blue chip index gave back less than half percentage point Wednesday. While the S&P 500 closed lower on Wednesday and slightly so on Monday, it managed to generate new all-time highs every day last week. The market seemed to largely ignore the headline news from the CDC recommending the pause of Johnson & Johnson's vaccine distribution on Tuesday. In fact, J&J's stock even appeared to shrug off the event by the end of the week. It seemed as though investors were generally optimistic last week, despite the less than positive news. On the economic calendar, Thursday's retail sales report from the Census Bureau showed a significant beat compared to expectations, as the report showed a 9.8% increase month over month. This marked the second highest month-over-month gain behind May of last year. Analysts point out to the combination of the reopening of bars and restaurants, as well as increased spending for clothing and sporting goods on the heels of this year's and last year's stimulus checks. Lastly, the fall in interest rates also stimulated market returns, as the 10-year fell 8 basis points to close the week with a yield of 1.59%.